Stellantis just sent shockwaves through the auto industry, and Jeep owners, workers, and dealers are all scrambling for answers. In a move that few saw coming, Stellantis confirmed a sweeping restructuring that effectively signals the end of Jeep as we've known it, while thousands of workers were shown the door with little warning. This wasn't a rumor, it wasn't a leak, it was a cold corporate announcement that landed like a bomb across North America and beyond. For decades, Jeep was more than a brand. It was an identity built on rugged freedom, American manufacturing pride, and loyal buyers who believed Jeep would always stand for something different. But Stellantis made it clear that heritage no longer protects anyone. Executives pointed to collapsing margins, rising production costs, and slowing demand, and then delivered the line that stunned everyone. Drastic action was necessary to realign the brand portfolio. Translation: Jeep is no longer untouchable. Factories that once ran around the clock have gone silent. Workers who gave decades of their lives to building Wranglers, Cherokees, and Grand Cherokees were informed their jobs were eliminated as part of a strategic reset. No long transition, no safety net, just a termination notice and a corporate press release filled with buzzwords. Entire communities that depended on Jeep plants are now staring at economic freefall. What makes this even more alarming is how fast it happened. Just months ago, Stellantis executives were publicly praising Jeep's global importance. Now, internal memos tell a very different story. Jeep models with weak sales are being discontinued, future projects have been shelved, and investment is being redirected toward electrification programs that may not even carry the Jeep name as buyers recognize it today. Dealers are furious. Many were left completely in the dark while inventory piled up on lots. Some were still being pressured to accept overpriced shipments, only to learn days later that certain models would be phased out entirely. This has crushed resale values overnight and left dealers holding vehicles customers are suddenly afraid to buy. Jeep owners are panicking too. People who financed vehicles at peak prices are now realizing the brand's future is uncertain. Warranty support, parts availability, and long-term resale value are all being questioned. When a company starts cutting this deep, consumers know what usually comes next, and it's never good for the people who already paid in. Behind the scenes, Stellantis is making a ruthless calculation. The company is juggling too many brands, too many factories, and too many losses. Something had to be sacrificed, and Jeep, once the crown jewel, has become a liability in an era where consumers are rejecting overpriced vehicles and walking away from massive monthly payments. Stellantis isn't hiding it anymore. Survival now comes before legacy. Unions are calling this a betrayal. Workers argue that mismanagement and unrealistic pricing strategies caused Jeep's decline, not labor costs. They're demanding answers about why executives remain untouched while assembly line workers pay the price. Protests are already being organized, and legal challenges are quietly being prepared as more details emerge about how these layoffs were handled. And here's the part nobody wants to say out loud. This doesn't just affect Jeep. This is a warning shot to every Stellantis brand and every automaker watching from the sidelines. If Jeep can be cut this brutally, no badge is safe. The entire industry is entering a phase where iconic names mean nothing if the spreadsheets don't add up, and what's happening now is only the beginning because Stellantis isn't done yet, and the next announcement could reshape everything buyers think they know about American-built vehicles as more plants remain under review and executives continue to evaluate which brands still deserve to exist in the future, while workers, dealers, and customers are left waiting for the next shoe to drop as the full impact of this decision continues to unfold across the market and into the coming months as uncertainty grows and confidence continues to collapse while the company moves forward with plans that are already setting the stage for even more drastic changes ahead. Inside Stellantis headquarters, the tone has reportedly shifted from confidence to damage control. Executives are now scrambling to reassure investors while avoiding direct answers to workers and dealers. Internal forecasts show Jeep sales declining faster than projected, especially in North America, where high interest rates and record vehicle prices have crushed demand. Instead of correcting pricing or slowing production earlier, Stellantis waited until losses piled up, and now the response is sudden and severe. Former Jeep employees are speaking out, and their stories paint a brutal picture. Many were notified through automated emails or short meetings that lasted only minutes. No clear explanation, no timeline for recalls, no guidance on retraining. These are skilled workers who helped build one of the most recognizable brands in automotive history, and they were treated as disposable the moment Jeep stopped meeting profit targets. The ripple effects are already spreading. Local suppliers that relied on Jeep production are laying off their own workers. Logistics companies are canceling contracts. Small businesses near shuttered plants are seeing foot traffic disappear overnight. When an automaker pulls the plug this fast, the damage doesn't stay inside factory walls, it tears through entire regional economies. At the same time, Stellantis is quietly rewriting Jeep's future on paper. Analysts say the brand isn't being saved, it's being stripped down. Fewer models, fewer trims, less physical manufacturing, more digital branding and outsourced components. That means the Jeep buyers recognize today may not exist tomorrow, replaced by a diluted version designed to meet global emissions rules rather than consumer passion. This is where longtime Jeep loyalists feel completely abandoned. The rugged, mechanical simplicity that made Jeep famous is being sacrificed for cost efficiency and regulatory compliance. Hardcore off-road enthusiasts are already looking elsewhere, while casual buyers are hesitating, unsure if buying a Jeep right now is a smart financial move or a costly mistake. Meanwhile, Stellantis competitors are watching closely. Ford, Toyota, and even emerging brands are studying this collapse and preparing to capture Jeep's stranded customers. When a brand loses trust, it creates an opening, and rivals are already rolling out incentives and marketing aimed directly at former Jeep buyers who feel betrayed by this announcement. What's especially unsettling is that Stellantis is framing this as a success. Press releases talk about streamlining, future readiness, and long-term value creation. But on the ground, the reality looks nothing like that. It looks like empty parking lots, locked factory gates, and thousands of families suddenly facing unemployment in an economy that's already stretched to the breaking point, and the timing could not be worse. The auto market is slowing, used car prices are wobbling, and consumers are drowning in debt. Jeep was supposed to be a safe, reliable name during uncertain times. Instead, Stellantis just turned it into a symbol of how quickly things can fall apart when corporate strategy collides with economic reality, and this growing instability is now raising serious questions about what other major automakers might do next as pressure continues to build across the entire industry. While insiders warn that this type of mass shutdown may soon become far more common if demand continues to weaken and profit margins keep shrinking under the weight of rising costs and changing consumer behavior. Behind closed doors, financial analysts are now dissecting how Jeep went from a profit engine to a liability in such a short time. The warning signs were there long before the announcement. Jeep prices climbed faster than wages. Monthly payments crossed psychological breaking points. Lease deals vanished. What was once marketed as an attainable adventure vehicle quietly turned into a luxury purchase, and buyers walked away. Stellantis didn't lose Jeep overnight. It priced its core customers out and then acted shocked when sales collapsed. Inventory data tells an even darker story. Unsold Jeeps were sitting on dealer lots far longer than industry averages, forcing dealers to slash prices at their own expense just to move metal. Stellantis continued shipping vehicles anyway, flooding the market while demand was already drying up. That decision crushed dealer profitability and destroyed confidence at the retail level, setting the stage for the sudden pullback we're seeing now. The layoffs weren't just about cutting costs, they were about shifting blame. Instead of admitting pricing strategy failures and misreading consumer sentiment, Stellantis framed the collapse as a labor and efficiency issue. That narrative allows executives to protect the boardroom while sacrificing the workforce. It's a familiar playbook, and workers saw it coming long before the public announcement ever hit the news. What's even more unsettling is how Jeep's brand equity is now being monetized rather than preserved. Licensing deals, special editions, and short-term cash grabs are being prioritized over long-term stability. This is often the final phase before a brand is hollowed out completely, kept alive in name only while the substance that built its reputation is slowly dismantled. Buyers who once trusted Jeep without hesitation are now second-guessing everything. Social media and owner forums are filled with questions about parts availability, dealer support, and long-term service commitments. When confidence breaks at this level, it's incredibly difficult to restore, and Stellantis knows it. That's why communication has been vague and tightly controlled, because clear answers would expose just how fragile the situation really is. Meanwhile, industry insiders are warning that this restructuring may not be the last. Plants labeled as temporarily paused often don't come back. Programs described as under review are frequently canceled outright. The language Stellantis is using mirrors past shutdowns across the industry that ended in permanent closures, despite early assurances that things were only on hold. This moment marks a turning point not just for Jeep, but for how automakers treat legacy brands in a high-cost, low-patience market. Emotional attachment no longer outweighs quarterly earnings. Loyalty no longer guarantees protection. And as Stellantis continues reshaping its portfolio behind the scenes, the uncertainty uncertainty surrounding Jeep continues to deepen, leaving workers, dealers, and customers trapped in limbo as the company prepares its next moves, and the full scope of this decision continues to unfold in ways that are only now beginning to surface across the automotive landscape. What's happening now is the silence, and in the auto industry, silence is often more dangerous than bad news. Stellantis has stopped giving timelines, stopped offering reassurances, and stopped engaging directly with many of the people most affected. When communication dries up like this, it usually means decisions have already been made behind closed doors, and the company is simply waiting for the right moment to reveal them. Suppliers are already acting as if Jeep's footprint will shrink permanently. Tooling investments are being canceled, long-term contracts are being renegotiated or quietly terminated. These are not temporary adjustments, they are defensive moves made when partners believe production volumes will never return to previous levels. Once suppliers pull back, restarting a program becomes exponentially harder and more expensive. The workforce impact is also changing the internal culture in ways Stellantis may not be able to reverse. Remaining employees are working under constant fear, unsure if their plant or department will be next. Productivity drops when trust disappears, and innovation stalls when survival becomes the only focus. This creates a downward spiral, where performance issues are then used to justify even more cuts. There's also a growing disconnect between Stellantis leadership and the Jeep customer base. Corporate messaging emphasizes electrification and global platforms, while Jeep buyers historically valued durability, simplicity, and proven capability. Pushing radical change without maintaining core identity has alienated the very audience that kept Jeep profitable for decades. Dealerships are now preparing contingency plans. Some are reducing Jeep floor space. Others are pivoting marketing budgets toward brands they believe have a clearer future. When dealers lose faith, a brand's recovery becomes almost impossible because dealers are the front line between the manufacturer and the customer, and that line is breaking. International markets aren't immune either. Jeep's struggles in North America are forcing Stellantis to reevaluate global distribution, which could lead to further cuts overseas. That means this isn't just an American story, it's a global contraction with consequences that extend far beyond one brand or one workforce. And while Stellantis insists this is about positioning for the future, the numbers tell a harsher truth. Cash flow pressure is increasing, incentives are rising quietly, profit margins are narrowing. These are the exact conditions that preceded major brand eliminations in past automotive downturns, and industry veterans recognize the pattern immediately. As this situation continues to unfold, one thing is becoming painfully clear. Jeep wasn't ended by a single bad quarter or one failed model. It was slowly boxed in by aggressive pricing, strategic miscalculations, and a corporate structure that values short-term financial optics over long-term brand survival. And now the consequences are accelerating as Stellantis moves deeper into a restructuring that shows no signs of slowing, while more internal reviews are underway, and the next phase of decisions is already being prepared behind the scenes, with outcomes that could redefine not just Jeep's future, but the broader direction of the global auto industry itself. Now attention is turning to what Stellantis is not saying, and that gap is fueling even more concern. There has been no firm commitment to protect Jeep as a standalone brand, no guarantee that future platforms will be engineered specifically for Jeep's use cases, and no assurance that manufacturing will remain rooted where it has been for generations. In the auto industry, what's left unsaid often matters more than the headlines. Insiders suggest Stellantis is actively benchmarking Jeep against internal competitors, weighing which badges justify continued investment and which can be absorbed, merged, or quietly phased out. This kind of internal competition rarely ends well for the weaker brand, especially when leadership is under pressure to deliver quick financial results to shareholders. The emotional fallout is becoming impossible to ignore. For many workers, Jeep was more than a paycheck. It was a legacy passed down through families. Losing those jobs feels like losing a piece of identity, and that resentment doesn't disappear quietly. It lingers, it spreads, and it damages the company's reputation far beyond any balance sheet calculation. Customers are responding in real time. Online search data shows rising interest in alternatives as buyers delay or abandon Jeep purchases entirely. When hesitation becomes widespread, recovery becomes exponentially harder because momentum in the auto market is everything. Once a brand is perceived as unstable, buyers simply move on. There is also a legal dimension beginning to surface. Labor representatives are questioning the process behind the mass firing hearings, while state and local governments are reviewing incentive agreements tied to Jeep production. If Stellantis fails to meet employment commitments, financial penalties and political backlash could follow, adding another layer of risk to an already volatile situation. Meanwhile, Stellantis continues to promote future concepts and technology roadmaps, but those presentations feel increasingly disconnected from reality on the ground. Concept vehicles don't replace lost jobs. Promises about future EVs don't reassure communities watching factories shut down. The gap between corporate vision and lived experience is widening by the day. What makes this moment especially dangerous is timing. The auto industry is approaching a broader reckoning as consumer demand softens and credit tightens. Jeep's collapse under Stellantis could become a case study in how quickly even iconic brands can unravel when strategy, pricing, and market conditions collide at the wrong moment. And as more internal evaluations continue and more programs remain under review, the uncertainty only deepens. Workers wait for updates that never come. Dealers brace for further cuts. Customers hesitate, all while Stellantis moves forward with a restructuring that appears far from finished, signaling that the situation surrounding Jeep is still evolving and that the most consequential decisions may not yet have been made as pressure continues to build, and the full ramifications of this announcement continue to ripple outward across the industry. As weeks pass without clarity, speculation is filling the vacuum Stellantis created. Industry analysts are now openly questioning whether Jeep is being positioned for a slow fade rather than an outright shutdown. This approach avoids immediate backlash while achieving the same result over time, shrinking the brand quietly until it no longer commands enough volume to justify independent existence. This strategy has been used before, and the warning signs are familiar. Reduced marketing spend, fewer product updates, delayed refresh cycles. When innovation pauses, competitors surge ahead and customers notice. Jeep's once dominant presence in advertising and cultural relevance is already fading, replaced by silence and uncertainty. At the plant level, maintenance budgets are being cut and temporary contracts are not being renewed. These are subtle moves, but they matter. When facilities aren't maintained, they deteriorate quickly, making future investment less attractive and providing justification for permanent closure down the line. Dealers are reporting that corporate support has become harder to reach. Approval processes are slower. Incentive structures are changing without explanation. These friction points push retailers to deprioritize the brand, further accelerating decline at the consumer level. Jeep's global reputation is also taking a hit. International buyers who once viewed Jeep as a symbol of American engineering are now questioning its reliability and long-term backing. In export markets, perception is everything, and instability at the parent company level damages confidence instantly. What Stellantis may be underestimating is the cultural weight Jeep carries. Unlike newer brands, Jeep is deeply embedded in military history, off-road culture, and American identity. When a company appears to discard that legacy, the backlash extends beyond economics into public sentiment, political scrutiny, and long-term brand distrust across the entire corporate portfolio. Inside Stellantis, morale continues to erode. Employees across other brands are watching Jeep closely, reading between the lines, and drawing conclusions about their own futures. When fear spreads internally, talent leaves, and replacing experienced engineers and managers becomes far more difficult, especially during an industry-wide slowdown. The most troubling part is that none of this seems to be slowing Stellantis down. Cost-cutting targets are reportedly being met. Investor reactions remain cautiously optimistic. From a purely financial perspective, the strategy may appear justified in the short term, even as the long-term consequences compound beneath the surface. And with every passing day, the question grows louder. If Jeep, with all its history and global recognition, can be reduced to this state, what does that mean for the rest of the industry? As Stellantis continues executing a plan that prioritizes immediate financial stabilization over brand preservation, the Jeep story is evolving into a broader warning about the fragility of automotive icons in a market that no longer forgives missteps. While the situation remains unresolved and the next developments continue to loom just out of sight, the pressure is now shifting toward regulators and policymakers who are starting to ask uncomfortable questions. State governments that offered tax breaks, infrastructure funding, and workforce incentives to keep Jeep plants operating are demanding explanations. Those agreements were built on employment promises, and when thousands of jobs vanish overnight, it forces a political response that Stellantis cannot ignore forever. Local officials are warning that abandoned plants don't just hurt workers, they destabilize entire regions. Property values drop, school funding shrinks, public services suffer. Once a manufacturing hub collapses, rebuilding it can take decades if it happens at all. That reality is fueling anger far beyond the factory gates, and it's putting Stellantis under a level of scrutiny the company may not have anticipated. At the consumer level, hesitation is turning into rejection. Buyers are delaying purchases, waiting to see if Jeep even has a future worth investing in. In the auto market, delay is deadly. Lost momentum doesn't come back easily, and every month of uncertainty pushes potential customers toward competitors that appear stable and confident.